Another trade recap. Today's trade recap is for Monday, March 24th. Today's trade recap, uh, today's trading day, actually, was a pretty textbook trade. Um, Unfortunately, I left profits on the table, and I'll explain why. So you can see my executions, my entry was right here, and then as you can see, stopped out at break even right here. But we did make a profit for the day, so let's go over that. So coming into the market, right, starting off on the higher time frames, the 4 hour, we're clearly over extended, as you can see. I wouldn't be surprised if because we're bound to have a retracement, right? So from these range lows to these range highs, yeah. So see perfectly within this opening gap right here, which price is gonna come down to probably tomorrow, if I'm giving a guess. But as you can see, it's also the 50% of this retracement. Uh, so or equilibrium, should I say? But anyways, marking our confluences for the day, right? We did have a lot of fair value gaps. Um, if let me just put this back to opening so I can mark out exactly what I marked out. 9:30. Okay, so obviously coming into the market, I like to mark out opening and then macro timing where I choose to take my trades and end times. So um, once that is done, I also like marking out previous session highs and lows that have not been swept. So as you can see right here, and that's pretty much it. Then 4 hour high time frame, we were super scaled up. We did have a lot of fair value gaps. This huge gap right here, and this fair value gap right here, and then we also had this fair value gap up here. Oh wait, right here. I think at this time when I hopped on the market, this wasn't even this hadn't been inversed yet. So we're on that, and then we had the highs up here. Show high up here, along with this low right here, and that was pretty much it, right? And then also we had pretty much this whole range right here was a pretty much fair value gap. Just cut out to the 1 hour. What do I see? We had this other fair value gap right here. Wait. Yeah, so if we from these range lows to these range highs, it's tiny, but it's there. And then let's go further to the left. What do we see? We can literally pinpoint this fair value gap as well. We'll leave this 4 hour one, and then we'll literally pinpoint this 1 hour. So it's from, where is it, right? Oh, it's already been mitigated anyways. Yeah. But we did have these hourly highs. Hourly highs right here, and then that's pretty much it. I guess if you want to mark out these little low right here. That's pretty much it coming into the day, right? So again, what are we waiting for? Price to come into one of these key levels. The 4 hour to be inversed, I guess. As you can see, it hadn't yet been made. So price market open completely came down, as you can see, and created this order block, right? Because why is this an order block? It was the sequence of down candles that came and swept liquidity or tapped into the imbalance. In this case, it swept the liquidity and tapped into the imbalance, and it didn't even close outside the imbalance. So you see within it, and then pushed out, closed above it, right? At that point, what am I waiting for? A retracement, right, into this order block, which we got. At that point, I'm ready to scale in. So, hold on. Ready to scale in. Shoot. 1 minute. What am I looking at? I seen that this was inversed, right? I seen that this was inversed. This fair value gap was inversed as well. This wasn't an equilibrium retracement on the 1 minute, because as you can see, we were way past that. But this hourly fair value gap was holding. So then we had this huge gap left right here. Why is this considered fair value gap? Because the opening of this candle wasn't the closing of this candle, or you know what I'm saying. So this is also considered fair value gap, and I'm just waiting for some type of confluences, some type of confirmation for me to take a trade. There was no break of structure yet, and I think it's right here where I entered. Actually, let me see. Yeah, because I'm pretty sure somewhere around here. Right here, yeah. So as soon as I seen this left right here, and I believe this was like, yeah. As soon as I seen this inverse, and then I seen this huge push out, and then this huge candle, this huge green candle push out of there, I was like, okay, we're gonna probably keep going higher. I'll take the risk. If anything, I'll put my stops right underneath this fair value gap right here that was holding, and I'm aiming for these highs, right? And I put my stop right underneath this inverse fair value gap, somewhere right here. This fair value gap, sorry. Right around here, because it was like a 2-to-1. And so my 1-to-1 was right around here. Once we hit my 1-to-1, brought my stops to break even. Price came, stopped me out at break even the rest of my position, and tapped into the 4-hour. What is it? 4-hour? Was that a 4-hour fair value gap? Yeah, and it inversed this whole 5-minute candle, which made me be like, okay, never mind. It just quickly came and tapped right back at the order block as well as that inverse 4-hour fair value gap that we had seen on the higher time frame. And right now it's chopping back. Back up. But yeah, my position got stopped out at break even with only one TP hit. My second TP was right here at these highs, and third TP at these other highs, hourly highs. But yeah, I mean, I think it was a perfectly executed trade. I didn't overtrade. I didn't re-enter position. I think it was, if I should have, or not should have, if I could have re-entered, if I would have re-entered, that's what I should say. If I would have re-entered my trade, I would have re-entered right off this inverse fair value gap right here, right, and entered right here, stops right underneath the low, and just captured the rest of the move again up to right here. And you can see it came and quickly went up there, for that full two. It would have been a 2.5 R on the day. But I'm not complaining. Again, my trading was, I think, executed perfectly and very well risk managed. Um, because again, I seen the 5 minute get inversed after I brought my stops to break even. Um, in this case, this order block and this inverse fair value gap held. But if it wouldn't have held, I mean, again, we don't know where price is gonna go. It could have, for all I know, came all the way down because again, we are super overly extended, and that was really what I was worried about. And we also have these London session lows all the way down here that price needs to come back down to and sweep, right? Um, so it was just overall. Look at this. Overall, this just all looks like super scary. Um, you don't know when price is gonna come and shit the bed and come all the way down to equilibrium and fill in this gap that it left, right? This opening gap. So again, my when I'm coming into the market, my job is not to predict; it's just to react to what price is showing me. Price was showing me weak order flow to the upside right then and there. And as you can see, I was looking at the 5 minute; it kept making bearish candles, and when I seen these huge one, and I was like, okay, when I start seeing weak bullish order flow right here, I'm like, you know what? I hit my first TP. I'll bring my stops to break even because I do not want to lose any money in this market today. If I'm looking at how order flow is looking, weak. This is all liquidity. All liquidity, as you can see. You can tell when it's liquidity and when it's about to be swept. When it's like you don't got a lot of momentum, not a lot of displacement. There was no displacement here until right here. I was like, okay, my stops are at break even. So if it comes down, I'm okay. I'm out. I already made some money for the day. I'm solid. I'm chilling. And that's exactly what it did. It came, stopped me out. I break even the rest of my position. So, um, yeah. So you can see, my first TP was 6 contracts. I had 6 left. So this would have been 4 contracts and then 2 contracts because I had a total of 12 contracts on. And myself stop, for the break even trade right here was 12 contracts. That's why it says 12 right there. So, yeah, I mean, unfortunate, but again, I do not complain because I did make money in the market. So, I think it was perfectly executed, perfectly well risk managed. Um, Now let's go over Friday because Friday was a bit of a choppy day, I would say. I did end up losing on Friday, so but I will not. If you lost that day, I will not, hold it against you. And you shouldn't feel bad about it because um, it wasn't your typical day in trading, right? It was quad witching day, and if you don't know what quad witching day is, I'll explain that right now. So, um, so quadruple witching day or quad witch. Is a term used in the stock market to describe a day with 4 types of derivatives or contracts expiring simultaneously. So that is the stock index futures, the stock index options, stock options, and single stock futures. And this event happens 4 times a year, just 4 times a year. So it happens on the third of Friday of March, June, September, and I believe December. So it's just the 4 quarters, basically. Um, and it matters a lot. So that's why I say if you took a loss today, you shouldn't be too concerned because, um, one, there's increased volatility than normal this day. Um, Traders and investors adjust their positions and close out their positions, which leads to higher trading volumes and price swings. And then Again, the expiration of these contracts forces market participants to roll over or close positions, which, like, an overall impact stock prices. So, um, and then on top of that, you got institutional investors rebalancing portfolios. Again, we are trading the Nasdaq, so a lot of institutional investors are in this market. So there's a lot of rebalancing of portfolios, which can create, temporary distortions in the market. So this day can create trading opportunities or unexpected price moves. So it's like a coin toss. So I don't think anybody who was, within uh this day trading Friday uh be too concerned when it comes if they took a loss this day. Because again, the volatility is more than usual, and it's more than it's very unexpected, you know. So the price moves is more volatile than usual. So this day was kind of a for the first time it made me feel anxious when placing a trade. So my first trade I entered. So overall, I um let's see. So yeah, so price opened and it was super volatile, like right off the jump. As you can see, price came, did this huge kind of back and forth, and I was just like, whoa. And I seen this order block or the breaker block because it's opposite candle, but it is sweep liquidity, so it's considered, I don't know, considered order block or breaker block. Um, and I was waiting for, as you can see, price to break to the upside, break structure, which it did. Once it tapped right here, let's see, can I move this out the way? Once it tapped right here at 9:55, I was like, okay, bet. Um, I'm gonna enter off the breaker structure. Enter right here. My first trade was like something like this. I don't recall, but it was overly extended to the Asian session highs at the most. And my stop was like super extended low. So the risk to reward was kind of but because it went super down in drawdown and I was like, okay, maybe I'm in the wrong and it's gonna come and literally um take me out. I closed like around right here. This was my first trade, right? Why? Because waiting for the breaker structure, and I don't know why I considered this the breaker block or order block. Sorry, order block. But it should have been this right here. Yeah, the second one. But I don't know. I didn't peep that at the time. Um, so as soon as I seen us inverse this candle right here, I entered again. However, when I entered, I entered half of my usual contract size. So, um, for example, I entered let's say I entered 12 right here. But let's say I entered 4. Entered 4 right here, I would enter 2 right here. But I remember it was like I think it was 8 contracts or something like that. And then right here I halved the size, so I entered in 4. However, because I saw we were pushing really high, I was like, okay, I'm gonna bring my stops to break even. Price came back down, stopped me out of break even. So the second trade was a break even trade. Didn't lose money, didn't make money. Then when we inverse this again, or we didn't inverse this, did we? No, when we held this, sorry, not inverse, held this again, and then inverse this, I was like, all right, bet. Last one, half the size again, going in. Half the size, let my stop just how it was. I went all the way in to the top. And eventually played out in my favor, right? But um as you can see, came literally all the way up during the PM session. I believe it came to these session highs. Yes, it did, I think. Maybe not. Yes, yeah. Yeah. So, but my point was if I just stuck to my trade, didn't stop out, or didn't if I would have just like literally let the trade play out, it would have been a winning day, as you can see. Because my initial trade never got stopped out. Never got stopped out. Um I think I put my stops like right here. Yeah, somewhere around here, but or no, like I don't know, somewhere around here because I took my profits. Yeah, right here. As soon as I saw this get invalidated, these like fair value gap. But point was, I didn't lose too much that day, but I did lose slightly because the profit from this trade, made some back. But unfortunately, since I was like 1/3 of my normal size of contracts, because I halved it every time. So first straight full size, half size, and then half of the half size. So that's like a perfect risk management in my opinion. I halved it every time I would re-enter because again, I don't want to put too much risk in the market. I'm only trying to take one trade a day, but if I feel like the reason I took another trade was because my initial trade was no was not a loss. It was I got fearful because of how whipsaw at price action there was in the very beginning, how much volatility. But I would have banked so hard this day if I would have just if I would have just kept my take profits and just let it run the whole day. But again, part of the game. Again, learning lesson from this day was just the fact that I just should have stuck to my stop loss, let it hit my stop loss because again, once I enter my trade, I should already have that mindset that okay, that money's already gone. Like if I lost it, I lost it. I'm okay with losing that. That's the reason why I'm risking that much amount, right? But I didn't want to be down that much again because I had just recently. This day was the day I was literally risking much higher in the market than usual. I had upped my lot size, or not my lot size, but I had upped my risk this day. So I was like, damn, like I'm gonna be down a lot. I don't want to be down that much. So I literally exited manually. I paper traded or paper handed traded or whatever you want to call it. But I shouldn't have. Lesson of the day is leave your stop loss where it is. If it gets hit, it gets hit because that is where your trade idea gets invalidated. As you can see, my trade idea never was invalidated, and I was correct the whole time. This day, I don't even know why I brought to break even. I just didn't want it to overturn on me again. It was just that fear. Uh, that day, I should have just kept my trade at the same point. Should just let my stop loss at the very bottom. But I got the fear got the best of me, and then second trade again, it got the best of me as well. Well, not really. I did get some profits in. I locked it in and just left it like that. Um, it is what it is, though. Overall, I think trading has been beautiful. Friday was just my emotions got the best of me, I guess you can say. But my trade idea overall was literally correct. My everything like I thought about was correct, so I'm so super thankful for that. And today I was correct as well. Um, my trade idea um never really got invalidated, but I did bring my stops to break even, which made it um guess you could say get stopped out, right? Because I could have banked a lot more. bringing my stops to break even, again, securing the profits, because again, we don't know when market was gonna get overturned. Again, there's a lot of gap, and again, we also have to rebalance back to equilibrium anytime soon. So I don't want to risk that. We haven't had a proper retracement on the 4 hour or even on the hourly, but on the 4 hour, we haven't had a proper retracement. When we do, it's going to be a very heavy one, again, because we have to rebalance this opening gap, which is also an equilibrium. So I was just, point is, I'm trying to just secure the profits, make money, bounce out. I'm not trying to be greedy. I'm just trying to get my money in out. Simple as that. But overall, I would have made money because my trade idea was correct. It was never validated. I just risk managed pretty well, I guess. Again, W day. But with that being said, guys, I hope you guys learned something. Any questions you guys have, you can leave a comment. Yeah. Catch you on the next trade recap. Thank you for watching. Peace.